Good day. Today, we want to talk in accounting, AS level, we have to prepare profit appropriation account. And when we have to prepare profit appropriation account, we prepare this account because of partners. So that means there are partners. There's a partnership account where we have our current account. So for profit appropriation account, how do we prepare it? We prepare it from what we retrieve from the income statement or the statement of profit or loss and other comprehensive income, where we have our net profit for the year. So we have an activity here to talk about. So in this activity, here it said Don and Swale are equal partners. The partners agreement provides for the annual salary of Don at 24,000 and Swale at 23,000. It also provides for interest on capital of 7% and interest on drawings for 3%. So the following information relates to the accounting year ending 2019. So the profit for the year from the income, comprehensive income, was 97,400. So we are told to prepare an account for this. So the first thing is this: to prepare the profit appropriation account, we need a table, and the table we're going to have the profit for the year at the extreme end. The profit for the year at the extreme end. Then we have the figures. Then they say here we have interest on capital. The total capital here. The total capital, we have 120 for Don, and capital introduced was 24,000. So Don, the total amount of capital, the total capital invested by Don is 144,000, and the total capital invested for by Swale is 80,000 plus 36,000, which is 116,000. And they have 7% interest on capital. So like I said earlier, when we are preparing profit appropriation account, the first item on the list at the extreme end is profit for the year, where we have to deduct interest on capital, we have to deduct salary, then add interest on drawings, because interest on drawing is regarded as an income for the business, while interest on capital is regarded as an expenses, and interest on and salary is also an expenses for the business. So for our profit appropriation account, the first item, like I said earlier, is the profit for the year, which is 97,400. Then interest on capital with less interest on capital. So our interest on capital here, we have for Don, we have 10% of 7% of 144,000, which is 10,080. And for Swale, we have 7% of 116,000, which is 8,120. So 10,800 plus 8,120 gives us 18,920. So 18,920, which is the interest on capital, has to be taken away from the profit for the year, which is 97,400. So having deducted 18,920 from the profit for the year, we have 78,480. We don't stop there. We have the salary. The salary for Don is 24,000. And the salary for Swale is 23,000. So these two amounts has to be taken away from the figure we have, which is 78,480. So 24,000 for Don, 23,000 for Swale, which are salary, will be added together, which makes 47,000 expenses there. 47,000. So we take 47,000 away from 78,480. So we have 31,480. So we check if we have interest on drawings. If we don't have, 31,480 becomes our residual profit, where we have to share for each partners based on the partnership deed. But in this activity too, we have interest on drawings because there is drawings from both partners, Don and Swale. Don withdrew 13,000 from the business. Swale withdrew 7,000 from the business. So 3% has to be charged on drawings. So 3% of 13,000 is 390. And 3% of 7,000 is 210. So 390 plus 210 gives us 600. So 600 is considered as an income for the business. So it will be added to the figure we have, which is 31,480. So our residual profit becomes 31,480 plus 600, which is 32,080. So 32,080 is what they're going to share as partners. So it will be based on their partnership deed, what their share of profit is. But before the share of profit will be the residual profit, because as soon as the profit is made, the profit for the year is made, we have to less interest on capital, we have to less salary from it, and we have to add interest on drawing if there is any. Thank you.